FRM Part 2. Market Risk Measurement and Management. Market Risk Measurement and Management in FRM Part 2 focuses on advanced techniques used to quantify and control exposure to changes in market prices, interest rates, volatility, and correlations. Candidates study value at risk, expected shortfall, stress testing, extreme value theory, and backtesting methodologies for evaluating portfolio risk under normal and stressed conditions. The curriculum also examines correlation modeling, copulas, term structure models, volatility surfaces, and fundamental review of the trading book regulations. Emphasis is placed on validating risk models, understanding model limitations, and applying quantitative tools to trading portfolios, derivatives, and fixed income securities within rapidly changing global financial markets. Credit Risk Measurement and Management. Credit risk measurement and management examines frameworks used to assess borrower default risk, portfolio credit exposure, and counterparty risk within financial institutions. Candidates study probability of default, exposure at default, recovery rates, credit migration models, and portfolio credit risk measurement techniques. The curriculum explores structured credit products, securitization, collateralized debt obligations, and credit derivatives used to transfer and hedge credit risk. Students also analyze counterparty exposure in derivative transactions, wrong-way risk, credit valuation adjustment, and stress testing practices. Regulatory capital frameworks, Basel standards, and internal credit risk models are emphasized to support prudent lending, capital allocation, and risk governance decisions. Operational risk and resilience. Operational risk and resilience focuses on risks arising from failed processes, human error, system failures, cyber threats, fraud, and external disruptions affecting organizational stability. Candidates learn how institutions identify, assess, monitor, and mitigate operational risk exposures using frameworks such as risk and control self-assessment, key risk indicators, and scenario analysis. The curriculum examines operational loss distributions, capital measurement approaches, business continuity planning, and resilience strategies designed to strengthen institutional preparedness. Particular attention is given to cyber risk, third-party dependencies, governance failures, and organizational culture. Strong operational resilience helps firms maintain critical functions during periods of stress, disruption, or systemic instability. Liquidity and Treasury Risk Measurement and Management. Liquidity and Treasury Risk Measurement and Management explores how financial institutions manage funding stability, cash flow requirements, balance sheet structure, and liquidity risk under normal and stressed market conditions. Candidates study liquidity coverage ratios, net stable funding ratios, asset liability management, contingency funding plans, and transfer pricing frameworks. The curriculum explains how liquidity shortages can rapidly escalate into solvency crises, particularly during periods of market disruption or declining confidence. Students also examine central bank facilities, collateral management, intraday liquidity monitoring, and stress testing methodologies. Effective treasury management supports capital efficiency, regulatory compliance, and institutional resilience in complex global financial environments. Risk management and investment management. Risk management and investment management integrates portfolio theory, behavioral finance, performance evaluation, and institutional investment practices into a comprehensive framework for managing investment risk. Candidates study portfolio construction, factor investing, hedge fund strategies, private equity, and alternative investments alongside risk budgeting and performance attribution techniques. The curriculum examines how institutional investors balance return objectives, liquidity needs, regulatory constraints, and risk tolerance within diversified portfolios. Stress testing, scenario analysis, and downside risk management are emphasized to improve resilience during adverse market conditions. Students also explore behavioral biases, governance structures, and strategic asset allocation decisions that influence long-term investment performance and portfolio stability. Current issues in financial markets. Current issues in financial markets addresses emerging trends, regulatory developments, and structural changes influencing global financial systems and risk management practices. Candidates analyze topics such as climate risk, sustainable finance, fintech innovation, artificial intelligence, cryptocurrency markets, geopolitical instability, and evolving regulatory frameworks. The curriculum evaluates how technological advancements, macroeconomic shifts, and interconnected markets create new opportunities and vulnerabilities for financial institutions. Students also examine lessons from recent crises, systemic risk events, and policy responses implemented by regulators and central banks. This topic strengthens candidates' ability to assess rapidly changing market conditions and adapt risk management frameworks to evolving financial, technological, and economic environments.